Welcome back. Well, for the markets, it's holding up with a gain, but the bank nifty is now slipped into the red, so just watch out for that, down around 66 odd points. We have a lot of the pharma stocks which are gaining today, so Cipla is up around 2 odd %. They did launch a complicated UTI drug, or a drug which is used for complicated UTIs in the Indian market. But separately, Sun Pharma is coming out with its numbers tomorrow, so that one is holding up with a gain of around 1.6%. And Divi's Labs came out with its numbers already, so we're seeing some amount of buying there, so up around 1.5%. Some defensive flavor really playing out in the markets, so probably why you're seeing a lot of these pharma stocks gain. But in any case, let's talk about one particular company. Acme Solar Holdings is the next management on the show. The company reported what was a strong set. Revenue and EBITDA margins came in healthy. Do note that Q4 did see a one-off exceptional gain of 697 crores. To discuss this and more, we have Nikhil Dhingra, who's the CEO of the company, joining in. Mr. Dhingra, thanks very much for taking the time out. If I can just start by talking about the capacity, at the end of FY25, it stood at around 2.7 gigawatts, and it's doubled from FY24. You do have plans of increasing it to 7 gigawatts by FY28. Tell us if it is achievable and your eventual target of 10 gigawatts by 2030.
Sure. So, in terms of the one correction I would like to make before we started, you mentioned that there was an exceptional profit. That exceptional profit happened in FY24. This year, FY25, we didn't have any exceptional profit. So, FY24, we had exceptional profit. So, the growth you see is much more exceptional if you adjust for that in the FY24 numbers. And in terms of the this year, we have expanded our capacity from 1.3 gigawatts to now 2.7 gigawatts since we commissioned a plant last week. And of course, this is slated to go up 3 gigawatts over this quarter and next quarter. In terms of moving to the 7 gigawatts operational capacity, as you know, we are in the long-term PPA business. We have contracted capacity with the central government of India, wherein we have to build the plants in those 2 years. So all our commissioning are driven by the PPA signing, which are there with the central counterparties for 25 years. So they have slated staggered commissioning timelines. Some is concentrated around May, June of 26, and some of them are concentrated around December 26. And the last phase is, you can say, around May, June of 27. So these are the timelines where we will go from 3 to 5 gigawatts of contracted capacity. And the another thing is, with our contracted capacity is, since we are doing a lot of FDRE projects and hybrid projects, the installed capacity number is much higher than the contracted capacity numbers. So when you are looking at these numbers of 7 gigawatt, the installed capacity will be much higher in terms of the installed capacity, because in an FDRE, typically you install 2 megawatts for a single megawatt of contracted capacity. In terms of the 10 gigawatt, of course, this 7 gigawatt target is for calendar year 27, reaching that operational capacity. And we do have all the PPAs in place, which is the first thing, the connectivity in place. We have around more than 50% of land for solar and 60% land for the wind. We plan to do for these FDREs. And we have tied up the long lead items for the capex. So we are on track to execute these projects. We do have the financing in place for the signed projects. So that's how we are doing it. And this is a very stable business in terms of the post-operational cash flows. From reaching from 7 gigawatt to 10 gigawatt, of course, we need to win only 3 gigawatts more of projects in the next 2 years to reach that capacity. Because once you win the project, it typically takes 2.5 years adjusting for PPA signing. So we are well likely to exceed the 10 gigawatt of operational capacity target by 2030.
Well, that is quite heartening. You will exceed the 10 gigawatt capacity by 2030. You'll probably do that in advance as against the earlier target that you had. If you could give us a sense of how this EBITDA ramp up will take place then, because from the capacity jump, the EBITDA jump will obviously be a lot more because of the operating leverage, and at the same time the rates, which may be slightly higher than what you had earlier written them for. I remember you had said that average tariff is 3.5 per unit for the 2.7 gigawatt capacity that you have, and bulk of the built-in capacity that you are, the capacity that you're building is likely to be bid between 3.5 to 4 rupees per unit. Can you give us a sense on how that is panning out, what your current realization per unit is, and what in increased capacity will the realization be, and as a result of which, what your EBITDA is likely to grow? Because I remember that 7,000 crore target by 2030, you said, is easily achievable.
So, in terms of you have a very good memory. So I think the 3.5 is the average tariff for our operational capacity. You are indeed right. And the average tariff for the under construction capacity is around 3.9 to 4. So you're right that the average realizations will go up, and also the per unit generation for a megawatt of contracted capacities goes up, because the capacity utilization factor for solar currently we are at around 25.6%. We have increased it by 200 basis points this year. In an FDRE, typically the CUF will be 45 to 55%. So that effectively for a contracted capacity generates that much revenue by a factor of around 1.8 to 2 times. So so definitely in terms of the EBITDA expansion, you are right that there is an operational leverage in this business. And in terms of the capital efficiency, if you look at our ROEs, ROC, we have industry leading ratios on that. So when we look at the revenues and EBITDAs, of course, this year we did around 90% EBITDA margin, improving on the last year. And that is, of course, resulting from the higher capacities of our plant. The cost from revenue to EBITDA is typically your O&M cost. And the larger your plant is, single location, the lower your costs are. So that is one bit of leverage. And of course, the other bit of operational leverage is the same sort of EPC team is able to build out larger capacity if you do larger plants on single location. So that will play out, of course, because most of our sites are upwards of 500 megawatts each. In some places, we are building more than a gigawatt. So that is because we have been able to gather connectivities and the PPAs required to get those connectivities at the appropriate locations, high radiation locations for both solar and wind. In terms of the EBITDA numbers, they will grow very steeply as we execute from 3 to 5 to 7. Of course, our capex also will go up in sync. And the key thing for us is, other than the EBITDA margins, is the return on capital employed, because this business is basically linked to that. We are not only after the P&L, we are all equally care for the ratio of P&L and balance sheet. So definitely the numbers will be in terms of the PPAs we have, that number, of course, is something we will try to achieve.
So 7,000 crore happens before 2030, your target, because 10 gigawatts happens before 2030 as well.
Yes, it of course, in terms of the exact revenues and EBITDA, of course, EBITDA is 90%. So as we go to the 10 gigawatt target, there'll be a steep jump in our revenues. Right now, we are at around 2,200 crores annualized sort of revenue. As we grow our capacity 3 times, and that too at a higher tariff, it will be definitely possible.
And just quickly, what would this do to your balance sheet, your current net debt, and what would it rise to, or how would you manage it? Just a quick question as you increase capacity.
Right. So this business is capex intensive. So the key thing for us is how quickly we are moving from taking debt to getting the capacity operationalized. And the other thing for us to look at is in terms of what is the net debt to EBITDA number for our operational capacity, and what is the net debt to EBITDA number on the let's say next 12 months EBITDA we are targeting for operationalizing capacity. So we have a stated target that we will never cross a debt to EBITDA of 5.5 on the operational capacity. As far as under construction capacity goes, we have a typical 2-year execution period for a project. The first year we don't draw any debt because we do land, transmission line, and we do the project with our equity contribution. The rest of the debt contribution comes in the second year. And that EBITDA starts coming up after 12 months of the debt incoming. So we will always try to be within the band of debt to EBITDA of 5.5 for the operational assets.
All right, Nikhil, we're going to leave it on that note. Thanks very much for joining in and speaking with us. Well, we need to take a short break, but here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.